Good morning and welcome to our live webinar, How to Implement and Comply with GASB-96, hosted by PKF O'Connor Davies. All attendees are in listen mode only. Before we get started, I'd like to go over a few housekeeping items so you know how to participate in today's call. We've taken a screenshot of the attendee interface, and you should see something that looks like this on your computer desktop in the upper right corner. You will have the opportunity to submit text questions to today's presenters by typing your questions into the questions pane of the control panel. You may send in your questions at any time during the webcast. We have a lot of material to cover, and if time permits, we will make an effort to respond. If we cannot get to your questions, a response will be sent post-event. This webinar is offering 1 CPE credit, and you will need to respond to 4 polling questions to receive credit. If you're having difficulty responding to a question, it is recommended you come out of full screen mode to respond. CPE certificates will be issued within 8 to 10 days via email. PowerPoint slides, a recording of today's webinar, and a few resources will be made available to you via email a few hours after the event. At the end of the webinar, we do have a very short survey which will be prompted, and your response is greatly appreciated. At this time, I would like to introduce Brian Petersen, partner with PKF O'Connor Davies. Brian?
Good morning, everybody. So we have a lot of different entities here on the call today. We have over 160 participants. We have towns, we have school districts, we have universities, several different BOCES, several different authorities, some colleges, cities, counties, and villages. So obviously pay attention to your implementation dates because obviously it's different for all of you. So just make sure you pay attention to that. So we also have other entities from New York State, New Jersey, and Connecticut as well. With regard to the questions, obviously with the number of participants, we are going to try to get through as many of them as we possibly can, but obviously time permitting, again, Harleen had mentioned that we'll follow up after the webinar is over. So today we are here to learn about GASB-96, how to implement and comply with 96. Our presenter is Lewis Stratton from DebtBook. He's managing director of that particular software company. So I'm just going to pass it off to Lewis and get him to get started with the presentation.
Thank you, Brian, and good morning, everybody. I'm coming to you live from Seaside, Oregon, in the Best Western Hotel. I'm here for the Oregon GFOA. Right outside this window behind me is the Pacific Ocean, and so that's roaring in the background in my ear. But I couldn't face it outside because the sun was too bright, but that's what the lighting is. So I'm happy to be on here today. I do travel around the country, and I am the presenter for DebtBook on GASB-87, GASB-96, technical accounting matters. A little bit about me and what qualifies me to give this presentation is that I was a career CPA for a number of years and was a partner in a firm. And my passion was really around the technology side of finance and accounting. I always, just at the time that I came out of school, had a passion for learning all of the different information systems and how we could automate things and improve upon those. And so I built a business around that and then was acquired by about the 6th largest firm in Chicago once you take out the national firms. So it was not the 6th largest firm in Chicago. It was just after you subtract out all the national firms, we were about the 6th largest regional firm there in the Chicago market. Spent some time there, and then through my earnout, pivoted into the technology world. So I spent a lot of time in the Northeast working a lot with healthcare, a lot of your hospitals, public finance in that area. And that's when I met the folks at DebtBook and said, this is absolutely phenomenal. This doesn't exist. This is a problem. And I would love to come and join you. So I'm excited to be on here and share what we're going to be doing with GASB-96 today. And so we'll just dive right into that. As we go through this, Harleen is driving the slides, so I may, ask her to move to the next slide at different times. So what we'll do, I want to give an overview of GASB-96. One thing that was interesting with GASB-87 is not everybody had leases, but I'm fairly certain that almost everybody, maybe somebody won't, will have software subscriptions. So I think, a lot of people were like, hey, we don't have leases or we don't have a lot of leases. But with GASB-96, I think most people are going to have subscriptions. If you're a school, you might have only had 2 or 3 leases, but you're going to have a lot of subscriptions. And we have some resources that we're going to provide at the end of this presentation. And so you'll have some additional information around what's coming up with that. So what GASB-96 is, just to make sure we're all on the same level here and in terms of what this is and what it's all about, is it's subscription-based IT arrangements. It is a lot like GASB-87, only there's not a lessor component. And so I've been hearing that. Everyone's like, oh, it's just like 87, but there's no lessor side. I was giving a presentation on GASB-96 in Illinois at the GFOA, and the first presenter that got up that morning said, hey, the state would like to create, a website where all of you can upload your financials for, transparency, and then we'll subscribe that back out to all of you. And so I was like, that sounds like a lessor side to GASB-96. And then the next thing they wanted to do is have a storage for body cams for all the police. So they would have like a central place where all of that footage would be uploaded and centralized at a state level. And they wanted to subscribe that back out. So I came back to DebtBook and I said, I got together with our technical folks that are also CPAs and said, hey, I keep hearing there's no lessor side. Is that because, it wasn't considered or whatever? It sounds like there's some things that might come up. So we called the GASB, we walked through that, and on those types of arrangements, the revenue recognition standards are what will apply. So there is absolutely no lessor side. If there's something that comes up and you think it sounds like there should be a lessor side, you're going to follow revenue recognition standards in those cases, not GASB-96. So just like with GASB-87, if you were on this presentation with us last year, you got to have a plan, right? And so we're going to walk through this plan. You're going to get a copy of this deck. So you're going to get this plan and you're going to be able to walk through this step by step with us today. What's really important is that you need to identify who's going to be responsible for each step in the plan. You have to determine the timing, like when it's going to happen, who you're going to assign to it, how much time you're going to give them to get that step of the process done. And that's what's going to drive your adoption of this new standard forward. I know with GASB-87, and I hear it all around the country, everybody hit the snooze button too long. They waited, and it created a wave of last minute work that was, I think, frustrating for you, for your CPAs, just really for everybody trying to get all of that stuff done last minute. If you are going to, you're going to want to make sure that each of the people you assign to these steps, that they're notified and aware that, hey, I need to block this time off. I'm not going on PTO. I don't have anything else going on, so I'm going to be available. If we can move to the next slide. So we've created our plan, and the very next thing we have to do is find all of those agreements. Now on GASB-87, I hear from people all over that was a really hard process. They're like, just finding everything was a challenge. And they'll talk about, all kinds of horror stories that we heard about, legal didn't have the contracts, they should have had them, or we found out that thing expired 20 years ago, but we just kept paying for it. So just a number of issues that came up for GASB-87. And with 96, it's going to be similar. You're going to have to round up the contracts, and there's likely going to be more of them. And you're going to have to reach out to IT and do some of the same processes. Your auditors are going to be concerned about completeness, meaning, did you find everything? Did you consider everything? And make sure that you have it all included. It's very similar to GASB-87. The question is, does the contract convey control of the right to use another entity's IT software? You're going to hear me throughout this. GASB-96 is subscription-based IT arrangements. So just like 87, you had to have those right of use assets, and you have to present them separately on the balance sheet from capital assets. 96 is going to be a third category of subscription-based IT assets, right? So, and there'll be our intangible subscription-based IT assets with an offsetting liability, and that'll also be disclosed separately, or presented separately. And that IT software is going to have to be controlled for a period of time in an exchange or an exchange-like transaction. No perpetual agreements, things like that out there. Some things that are new to subscriptions. Does the IT software contain a tangible capital asset? My favorite story of this, I was at the Florida CPA Society Government Conference, and there was a panel, and there was a 26-year veteran who had been a director at the GASB and was super technical. And then there were a couple of partners from CPA firms, audit partners, in a panel. And then the audience included a mix of, finance officers from GASB regulated entities, as well as CPAs and folks like myself. We were all just there to get CPE and participate and learn from one another. And one of the audience members asked the panel, hey, what about body cams? We subscribe to that. We didn't buy the cameras, there's a subscription. And the GASB guy said, oh, that's just a junk piece of plastic without the software. And they said, no, those cameras are super expensive. And he said, oh, they're like, there's battery packs, those devices are not cheap. He said, well, then maybe the whole contract should be covered under GASB 87. And they're like, no, but there's a major software component to it. And so they bantered back and forth about that and came to the conclusion that they might have to split the asset from the software, and maybe the camera might be 3 years, maybe the software is 10 years. They'll just have to look at the terms and the assumptions. So you have to look at this and say, is there a tangible capital asset as part of what you're looking at, or is it all software? So you're trying to determine if that IT software is insignificant compared to the capital asset. You also want to make sure that this is not some sort of a perpetual licensing agreement. If it is, you can't present value a forever contract. Like that's impossible. It goes on forever. So, and then the question is, are the contracts 12 months or less? Then that would include any extension options, things like that as well. Those would be the short-term agreements. If we can move to the next slide, please. All right, so something new for 96, we're collecting all of these agreements. They might have some costs that you're going to have to capitalize with IT subscription arrangements, and we'll walk through these different stages of implementation. So in addition to just doing the present value, the standard requires that you track the project costs for these 3 stages of implementation. So the first stage is that preliminary project stage, where you might have to spend some time determining if you need to buy something, a new ERP system, looking at shopping and considering all of those alternatives that are available to you so that you can make your selection. Those costs will be expensed as they're incurred. As you move on with your selection, you might have some implementation costs to set that up, configure it, and get it rolled out. And those costs are going to be capitalizable, so that after you do that present value calculation, you're going to add those capitalizable costs into that present value calculation. Once it's set up and running and you have this IT arrangement working, then you may have some additional costs, add-on stuff that occurs, and those get to be expensed as they're incurred. And I've got a list down here at the bottom of just some costs incurred prior to the following that should be expensed as incurred as well. So any costs that are incurred prior to the determination of your specific objective of the project, any costs that are incurred prior to the demonstration of any technical or technological feasibility, and any costs of the demonstration of any current intention, ability, or presence of effort. So basically all the costs before you decide you're going to go with something, and they just worded it technically in that area. So if we can move on to the next slide. Oh, we got a polling question.
All right, our first polling question is, where are you in the process of collecting and organizing your subscriptions? A, we have collected a few of our subscriptions so far. B, we have collected all of the subscriptions that we know of. Or C, we have not started collecting our subscriptions. We will give 30 seconds for everyone to answer. All right, and here are our results.
All right,
All
so
right.
I can see, yeah, that a lot of you have not started collecting your subscriptions yet. You know, we're going to, again, continue with this particular process, but make sure you get your IT directors involved in this as quickly as possible. In that email that's being sent later on today, you'll see some examples of some particular softwares and stuff that are most likely going to be at your school district or your towns. So make sure you get that to them and get them to start pulling those contracts. So a lot of times what I've seen is they have it already in a list because they kind of keep track of it as part of their budgetary process as well, what their annual commitments are. So if they can just expand on that list and put the terms in, that's going to be very helpful for the auditors and for you guys with the implementation for 96.
Awesome. Thanks for those comments on that, Brian. If we can move to the next, there we go. So, and once you find everything, right, that's now the real work begins. So you're gonna find all of your contracts, your agreements, and now the real work begins. You have to extract the data. And we really recommend that you use a checklist to do this so that as you're reading through these agreements, you're extracting all these components that are necessary to do the present value calculation that you're gonna have to do. And you'll say that you see on here that there's 4 primary categories of information. There's actually 5. The missing one is interest rate, but we'll talk about that. I don't think the interest rate is necessarily going to be in the contract. It's something you're going to have to figure out or calculate, and we'll talk more about that as we move through this. But as you're going through these agreements and you're using the checklist, you're going to want to get the people involved that are familiar with the contract. So if that's IT or some other department, if you're a school, maybe it's, different educational folks that may have subscribed to different learning management systems or software that you're utilizing in your organization. The information you're going to have, so we're all finance folks on the line, doing a present value calculation, you got to know the number of periods that you're going to have to use, and that's your subscription term. And we're going to talk about these things in detail as we go through them. But the next thing is going to be the payments. And the question there is, do we have a fixed payment? Do we have some sort of a variable payment that we're going to have to go through? What is that payment amount? So we know the term, the payment, and an interest rate, and we can present value that back. We then would need to know any payments that were made at commencement. So those capitalizable implementation costs that you would have to have, that you would adjust that with. And then next would be any prepayments or incentives that you received before the commencement that you would adjust that present value calculation for that amount. So if we can move to the next slide. So let's talk about the subscription term. Just like with GASB-97, it's all about reasonable certainty. Do you have a non-cancelable subscription? Some subscriptions might be 3 years. So that would be 36 months, non-cancelable. Do you have the option to extend? Are you reasonably certain you're going to do that? The same thing is true with termination options. The same thing would be true with any fiscal funding or cancellation clauses that are out there. And then, do you have cancelable periods? And so one of the ones that was an interesting topic here in Oregon from the schools is, what about our Netflix subscriptions and things like that? We're really paying for content. Is that an IT arrangement? But that's really a month-to-month, possibly cancelable contract that likely won't count. There's a number of those things that come up as we get into that. So some interesting conversations around all of them. It's going to really come down to like, and 90% of my answers to your questions are going to be, it depends. I need to read your contract, because you're going to have technical questions for us. And so rather than me getting tricked into answering something and going one way or the other, I just say it depends. We have to read the contract. So as we go through some of that's what typically the answer is going to be. So you'll need to find your agreements and read them and see what they say and what the terms are with your vendor. If we can move to the next slide, please. Next, once we know what the term is going to be, we're going to talk about payments. And so we might be paying a flat amount, either monthly, annually, or quarterly, for different types of subscriptions. We could have variable payments. Well, I'll save this example for later, but you might have the variable payments that are fixed in substance, so you know what it is. And so maybe you're paying for a certain amount of cloud storage and that caps at a certain number, but then for every gig you go over, there's a variable component. And maybe you're paying a flat amount every month for up to something. So then you would use that fixed portion as your payment, and then the variable portion you'd keep track of and disclose later as you do that. And then do you have any termination penalties, contract incentives, or other payments that you need to keep track of as well? If we could move to the next slide, please. When we start looking at payments and other costs, we have to look at any payments that were made at the commencement, and we would have to increase the subscription asset by those. So we talked about some of this already up front. What are those implementation costs? So you're going to have to track your project costs. Your auditor is going to want to see how you kept track of all of your project costs and kept all those separated, and then added those into the cost of your present value calculation for amortizing that. And so as you go into this implementation year, there might have been projects that you've done, and you're going to have to consider what some of those costs are and separate them out between the costs that were used to determine whether you should or shouldn't have purchased a subscription, and then the costs that were involved in implementing that subscription and getting it live. And then did you have any prepayments, incentives, or incentives received before commencement that you might have had? Did you have a vendor that like paid the penalties to get out of a contract to take over, so they could take over the relationship, things like that. So if we can move on to the next slide. So subscription and non-subscription components. Just like with leases, we have this. And one of the first bullet points on here that doesn't really relate to non-subscription components, but it's about multiple underlying IT assets. So this is where we just get this out of the way, talking about this. I was, again, in Florida at the ASBO speaking to all schools, and I had a school district finance person. They weren't the finance director. They were more of an analyst, but they stood up and they said, we have a contract, or then they're like, we have 20,000 Office 365 subscriptions, and they start and stop when employees come and go, right? So you get a job, they give you an email and an Office 365 account, you leave or are terminated for whatever reason, and then that ends. And she's like, are you telling me we're gonna have 20,000 subscriptions to manage through Microsoft? And I was like, you contract individually 20,000 separate agreements with Microsoft? And she said, I think so, yeah. We went back, we talked about this, and we just think that they don't do that. We think Microsoft wouldn't do that and the organization wouldn't do that. We're thinking that what's happening there is that they're probably paying a flat amount for 20,000 licenses, and then they're paying an incremental amount for the next 5,000 if they exceed that, or something like that. That there's no way that they're doing 20,000 separate subscription licenses. That would be tough to manage for Microsoft, for the enterprise. So we're thinking there's some sort of an enterprise contract. We haven't seen it. So if they are doing it that way in the aggregate, that could be potentially material. We'll talk about that. Individually, they wouldn't be material, but the idea is if they're all on the same term, if they all start and stop on the same date, you get to treat it as one agreement. if they all do terminate on different dates, and that's what prompted the question from the audience was, hey, we have all these Office 365s and they all end when employees terminate. So are those separate agreements? And so we would think there would be some sort of a master agreement that would cover that. But if it's all on the same terms, it's one agreement. If they're all on separate terms, then they are separate agreements that have to be considered and calculated. Now, you might have non-subscription components. Some examples here are any perpetual licensing agreement and maintenance stuff that would come up on software. And you're supposed to treat that stuff separately. It's just like with GASB-87 where you have your non-lease components. And then if the contract doesn't separately state this information, but you know it's included, you're supposed to use the best fair market value information to allocate that out and separate it apart. And if you're not able to do that, then you can treat it as a single component. But you have to make your best effort. And when your auditors come in, they're going to want to look at that and see if you made an effort to do that or not. With that, we can move to the next slide. So you found all the contracts, you've extracted the payment term, the term, the number of periods, you figured out the payment, the variable portion, you've looked at it for multiple lease or multiple subscription components, and are they on the same term? Is there any non-subscription components that we have to break out? And then you're going to have to craft those schedules. And here's an example of what you're going to have. You're going to end up having a subscription asset on the balance sheet with a subscription liability. And you have to discount that term, the payment, using an interest rate, which we still haven't talked about, to get that present value. And then once you get that present value, you're going to add or subtract any kind of payments that were made at commencement, so the implementation costs, and any kind of prepayments to adjust the subscription asset that would go in there. Materiality. We'll talk about materiality here. This always came up with GASB-87, but what I would like to share with you is it is the auditor's decision of what materiality is. And so if you think you have something and you want to argue it's not material, you really should get them to okay that. What the auditors need to do is they need to go in and build out their formula and their calculation, and then they need to be able to apply that materiality formula to your total assets, your total liabilities, your total revenues. And they come up with these thresholds and they figure out what that dollar number is. And then they look at all of your adjustments in the aggregate. And as long as they're under that materiality threshold, everything's okay. But everything is handled in the aggregate for materiality. And it's hard for the auditors to do their job if you don't have your books to the penny. So as an internal accountant or finance person, it's our job to get the books as close to the penny as possible so that the auditors can come in, apply their rationale, and they get a little leeway. They don't have to be to the penny. They're just trying to make sure that you are materially correct in the work that you did. And so like a planned deviation from being accurate is not typically a good idea. What it is not is it is not your capital asset threshold that you would say, hey, we don't capitalize anything under this threshold. That is not what materiality is in this case. It's everything in the aggregate added together and applied on your balance sheet for your auditor to come in and look at that. And Scott or Brian may chime in on that towards the end when they come back on, but I wanted to highlight that so that you guys know that you should really try to make every effort to get this as accurate as possible so that they can do a good job on their side without having to worry about that, and then document it and say, okay, we've documented that it was immaterial and pass on it. So if we can move to the next slide. So you can use Excel to craft the initial schedules. You know, you're going to be able to go in, you can use that present value formula. You can pick your interest rate, which we're going to talk more about on the next slide, the number of periods that you determined, the payment amount, and then a 0 if it's at the end of the period, or a 1 if it's at the beginning of the period. You can hit enter, and then that calculation will come up. You know, so some people did it on calculators. I would do this in Excel probably if I needed to, but that's how you would pull that in to do that calculation. If we can move to the next slide, please. And here's where we're going to talk about interest rates. So I don't know, I make numbers up all the time about how many people I've been in front of presenting on GASB 87 or 96. I know I've presented it a lot in front of at least 1,000, if not 5,000 people, you know, a lot of people. And I've asked everybody, how many of you have a contract that has a stated interest rate in it? And I've really only had one guy raise his hand and say, me. But what I've found is most of these agreements do not have a stated interest rate. I think subscriptions, I don't know why they would have a stated rate unless you were doing some sort of a capital finance of some old software that you acquired a right to use internally that's an on-prem solution. But if the stated rate is there, that is what the standard says you will use. If it's not there, you would move next to the implicit rate. And to calculate the implicit rate, you basically would have to know the current value of the item that it is you're dealing with. So you'd have to know the fair value of that subscription, the payments, and then you kind of back into that interest rate, and that's the implicit rate. The incremental borrowing rate is the rate that you would have paid for that subscription based on your credit rating. And so I'm actually giving presentations to a number of folks across the country. There are a number of audit firms who've been saying, hey, just call your banker or call somebody else. And it's interesting because they're saying, hey, those folks are telling me, hey, we don't want to give that information out. So DebtBook has built a calculator. So we calculate this for our clients when we do the work. And we will provide that calculator as a resource to you for attending this call. You can have that calculator, and it's basically just an average cost of money during that time frame. You put in your bond rating or your credit rating, you put in the date, the start and end date of those subscriptions, and then we have like an average cost of money with an average margin to banks on that across the country. And so I think we all agree it's not exactly what you would have paid, but it's a very scientific method that's supportable. And a number of audit firms have approved it and said, yes, this will work for what we're trying to do. If you err on the side of a little bit higher interest rate, your present value is going to be lower. And if you err on the side of a lower interest rate, your present value is going to be higher. So the lower the rate, the higher the asset is going to be in doing that. So that's a little bit about rates. We'll give you a resource to help with that. But we also just do that for the clients that we serve. So if we could move to the next step. So, man, you've done a lot of work already. You've found all of your agreements. You've extracted all of the data, the term, the payment. You've calculated the incremental borrowing rate. You built those schedules for your asset, your liability. Now it's time to look at everything. And so what you want to do is give yourself a couple of weeks here, because it's very unlikely you're going to review your own work and come out of it without making any changes or adjustments to what you've done. And you're going to want to figure out who's going to be a part of this review team. And you're going to want to make sure that you, as you went through and did all that work previously, that you documented it, kept good records of the process that you followed, and you documented your assumptions around reasonable certainty, how you calculated the incremental borrowing rate. And then you find the people that are going to come in and look at this, and you need to make sure you include those who were a part of that original contracting process and have them involved in this. Possibly get an outside specialist who's familiar with the GASB-96 standard to review this work with you and pull that team together. So with that, we can move to the next slide. And polling question.
Our next polling question is, have you identified who will be performing internal review for GASB-96 compliance within your organization? A, yes, but they don't actually have time to review our compliance with GASB-96. B, yes. C, no, we have not gotten around to it. Or D, no, we don't have the personnel available to review our compliance with GASB-96. Again, we'll give everyone 30 seconds to respond. Okay, here are our results for the polling question number 2. I'll go ahead and move on to the next slide.
All right. After you've done all of that work and now you've reviewed it, made any updates or changes, you need to aggregate all of those schedules and summarize them into your journal entries. And these journal entries are not going to be that complex. They're pretty easy, but they're going to be highly susceptible to your auditor's scrutiny. So your auditors are going to come in, they're going to be going through your general ledger, and they're going to say that there's some GASB-96 entries, and then they're going to want to drill into it, go back, look at all those schedules and all that work you built and how you extracted the data. They're going to want to review those original subscription contracts. They're going to want to tie all that information out and make sure that you followed the standard, that those contracts are, that you found them all, and that they're in compliance. So that's what all is going to happen there. But here's an example of the full accrual and the modified accrual journal entries that you will need. And so this will be in this deck that you'll receive at the end of this call. In some cases, you may have some restatement entries as well. On the lease side, I know what those are. I don't know here on any subscriptions. I don't know that I have any examples for you on that. But if we can move on to the next slide on this. Oh, it's time for another polling question.
Our third polling question is, do you plan to engage an external consultant to assist with review? A, no, we are confident that we understand the requirements of GASB-96. B, no, it is not in budget. C, yes, or D, I'm not sure. Again, we'll give everyone 30 seconds to respond. All right, and these are our results for polling question number 3.
Now, when we asked this question with GASB 87, there was actually a lot less people that were going to, in essence, go with an external consultants, and then even like the previous question as far as like when you're going to get started. So we're actually seeing a percentage of individuals making sure that they're more prepared for 96 this particular period. And I think that's because of some of the struggles that we've had with 87, and they realized it was a little bit more complicated than expected. So, this is good. Just remember there are multiple options out there for everybody to do, whether it be software companies or accounting firms or just even additional training classes. A lot of times reach out to your auditor and, they'll have additional guidance for you to help lead you the right direction.
Yeah, and thanks for that, Brian. I'll add, I sat in a room with a bunch of professionals that are involved in implementing GASB-96, and they say that the implementation guide from the GFOA on 96 has one question. It's really, really vague. So 96, I think, is going to be a lot tougher to do.
Yeah, it's funny you mentioned that. And I noticed that too. And, a lot of people have, in essence, been going back to the implementation guide on 87 to try to figure out where the 96 answers are going to be as well. So, that's another alternative because they're just so similar. So if you can find the answer in the implementation guide for 87 that has a ton of questions, chances are it'll be the same answer for 96.
Good. All right, so you've done all this. Hopefully you've had an outside review, done the journal entries. It's time to prepare your footnotes. Some notes that you're going to have around GASB-96. You're going to be required to provide a general description of each of your subscriptions. That's going to have to include the basis, the terms, any conditions or variable payments that were not included in that liability when it was calculated. You're going to have to be sure to list those subscription assets separately from your other capital assets. Recognizing any outflows for other payments that were not included in that subscription liability present value calculation. any principal and interest requirements to maturity. So just like your debt schedules that you have to do, where you have to list the 5 years individually and then do 5-year groupings thereafter. Any commitments before commencement, and then any loss associated with impairment on that. If we could move to the next slide. Next, we're going to talk about adhering to ongoing compliance. And this is where I get to kind of like tell my history of technology in my career. And so you've spent all this time finding all of these contracts, rounding them up. And I think back to my first job in 1993 out of college, not my first job, my first professional job after I graduated. And I was 22 and my boss was 58 at the time. And I was at a company that used really old technology. And so I watched that company go from green screen, and then we implemented these DOS-based PC accounting software, and then we upgraded to Windows, and Y2K was coming around, and we had to do all kinds of work for Y2K. And then everything started moving to the cloud, and around 2010 is when I saw it first in 98, but it really started to get used a little bit in 2010, and by 2012 it really had, I'm going to say, crossed the chasm and people started buying cloud, and by 2015 it started to become sort of the standard. That's not all true in government. I'm all over the country, and government technology has been left behind somewhat, and so I'll talk a little bit about that as well. But you know, you spend all this time, and when I worked for this guy right out of school, I mean, I would have found all these contracts. I would have labeled some manila folders for each one, and I would have probably filed them alphabetically in a fireproof filing cabinet somewhere and kept track of all that. He would have given me a sheet of green accounting paper and said, here, list all these contracts out on this thing. And I would have had to do a lot of stuff manually on paper, and he would have had a notebook in the drawer in his office that was under lock and key with a list of all the contracts or something. And that's how we would have done that. And we used to, we would do accruals and different things on green accounting paper, and I would have to add it up on a 10-key calculator and tape that onto the green accounting paper, and I had to add it up twice on the 10-key. And I wanted to get really fast. I practiced on the 10-key so I could be a speed demon on that thing. And so I would add it up, tape it there, and I would take it in, and he'd see it. And I was like, man, there's a thing, I got up the courage to tell him, there's a thing called a spreadsheet. Have you ever heard of Lotus 123? I could put this stuff in there, and it'll do all this math, and I wouldn't have to do this 10-key thing all the way anymore. He was like, I don't trust the computer. I got him to finally let me enter it into Lotus 123, but he required that I print the piece of paper out, not share the spreadsheet with him. And so I would print the spreadsheet out, and then I still had to add it up with a 10-key so that he would be sure that the computer was right. There was one time, if you know how spreadsheets work, where you have fractions of pennies when you're doing calculations and percentages and math, and it was off 1 penny. And he's like, see, I told you, you cannot trust the computer. And we went through that, and I showed him how it worked. And so we finally got to the point that he was comfortable and we could do that. Over time, right, like when we were implementing all that accounting software and doing all that work, that's really what was foundational in my career of getting involved in technology, because we did all those reports on green accounting paper and using our 10-key. And then when we moved to spreadsheets, that automated a lot of that. It automated adding columns, and it made things faster where we could do more work and get more insights. And spreadsheets have become so overused that if you Google how many spreadsheets contain errors, it's going to say more than 90%. So my old boss would love that statistic, because he would tell me, hey, see what the issue is. But what's happened is now software has been built, and software provides controls that minimize those kind of errors that can occur from spreadsheets, and all of the different data entry errors that can occur, and calculation errors and things that can occur. So you've done all this work on your 96, you've got to round it up, and you can put this stuff in manila folders, you can summarize it on green accounting paper, you could scan it in and store it on your internal server and summarize it in spreadsheets and do these calculations on spreadsheets. or you can just buy software, enter the information and press a button and get the answer out. And so you need to, whichever process you follow, you need to document this and you need to have everything laid out so when the auditors come in, they can have that. I'm a huge fan of the alternative. My whole passion is for finance, accounting, and helping CPAs and internal accountants with automation. We're facing all kinds of staff shortages and challenges for both internal organizations as well as these public accounting firms. I heard a stat that over 45% of government finance officers are going to retire. There's a lack of investment in government technology because governments don't adopt new technology as often as they should. CPA firms are struggling to find staff. I am presenting at Sakubo, which is for universities, but I was at Nakubo last year, and I learned that we have a student shortage as well. Starting in 2026, over a period of 10 years, they're expecting to have to close as many as 30% of the universities in this country because birth rates have dropped off starting in 2008, and we don't have enough high school graduates to fill our schools. That means all of our governmental organizations, all of our CPA firms are going to be competing for fewer and fewer students that are available, trying to attract them to our professions. And we need to be able to do that. And so one of the answers is going to be that we need to be really efficient in the things that we do and automate those things. And that's why I'm with the company I'm at. And so as we move to the next slide, all I would invite you to do is to know that we are one of your choices that are out there for doing some of that. But we have first, before I do that, we have a polling question.
Our fourth and final polling question is, have you started documenting a plan for ongoing compliance with GASB-96? A, yes, B, no, or C, I have no idea. Again, we'll allot 30 seconds for everyone to respond. Right, moving on to our final slide.
It's actually good to see the 20%, so, again, it just seems like we're a little bit ahead compared to, last year when we were going through this particular process. That number was even lower than 20%, so it's good.
Yep, and for the 64% of you that said you haven't started yet, and with my impassioned invitation I was about to make previously, we would invite you, if you're interested in learning how to do this in the most efficient manner possible and you'd like to see a product tour of our company, DebtBook, we're going to offer an invitation to you, and I think Brian will provide more details, but that product tour is going to be on Friday, March 3rd at 11 a.m. Eastern time. In the meantime, if you have questions or you would like to follow up with me or any of my colleagues or just ask technical questions about GASB-96, feel free to reach out to us at partnerships@debtbook.com. With that, Brian, I'm going to turn it back over to you and Scott.
All right, so one of the things Lewis had mentioned and brought up was as far as documenting the process, and as auditors, that's what we love to see, get that process, I believe the slides are going to be available as well. After this, you kind of see what the implementation timeframe is and go through and try to utilize that, develop a plan as far as the implementation. Try to make sure that you get several different departments involved. I've been in a couple of implementation plans already. We've reached out to the IT director and she gave me this great, schedule and with the terms and everything else that was on it. And then she goes, oh, what about this software? Oh, what about, planning does this one. What about the school lunch program? They use a different type of software. I'm not in charge of that one. And so there might be several different departments that are absolutely, going to have to get together to make sure you guys have a complete population. And what else? As far as the implementation period, obviously, I mentioned in the Q&A, but June 30th of 2023 is the first period where the implementation must be done. So for a lot of our school districts, I believe it's our June 30th year ends. And then I know for 12/31 of 2022, a lot of our towns and stuff are implementing 87 now, so they have 8 months or so before they have to kind of start getting the process started for 96. But I would definitely recommend not waiting that long. And then what else? Scott, do you have anything?
Yeah, I mean, I think the important thing for today is the fact that we flipped the calendar. It's March 1st here. And while that seems like a lot of time for those on the call who have the June 30th year ends, it's really not. You could see, as compared to leases, there's probably going to be a lot more here. Many of you probably didn't even implement for leases because it was, with your auditors, you determined it was immaterial, or you really didn't have, that many leases. It's a pretty good certainty that everybody is most likely going to have to implement this and reflect these amounts in their financial statements. And it's going to be the June 30th that are coming up that have to do it first. Most of my June 30ths are in the middle of, budget preparation, and, and once you get through that, you'll be, trying to close the fiscal year out. And this is something that is really, I think, in many cases beyond the normal finance department function, as Brian
Yes.
and Lewis have said. You're really going to need to get your IT folks, or anybody else in the district who's involved with any of these software applications. It's going to be a lot of information gathering and then putting it all together. So we wanted to arrange this webinar early, March 1st. It's 4 months away from the end of the fiscal year. It seems like a lot of time, but as we've said here, you could see from the first slide, there were a lot of different steps that are going to need to be done. And if you're going to use an outside vendor to do this work, you have to allow them enough lead time to get all your data entered and everything. So really important to think about this. You got other things on your mind, there's other priorities, but I think this is going to be critical this year.
Mm-hmm. All right, so gentlemen, one of the questions that came up is specifically related to one-year subscriptions. So there are several of these entities that are on the call today that have one-year subscriptions. So contract is for 1 year, okay, and then they know that they're going to renew. Should they be considering that in their term period or not? Now, even though it's not in the contract, so it's clearly not in the contract, it's just a 1-year subscription. I know they a lot of the contracts that I've seen, especially for budgetary purposes, especially with those learning platforms that they use for a lot of the school districts, it's like 1-year contract. So I went through GASB. Clearly, it talks about the subscription term, and the term says that the period covered by a government's option to extend the SBITA is if it is reasonably certain, based on all relative factors, that the government will exercise the option. So, but here there is no option, but it's only 12 months, so therefore it's short term. So you wouldn't have to, in essence, include those. So Lou, can you maybe expand on that a little bit? Because obviously, there's, when they're doing their budget in May, they already know that they're going to renew this for another year, and does that affect the valuation for this particular purpose?
Yeah, again, I would just want to read the contract, talk to the specific instance, and agree with you on your summary of the fact that if it's 12 months or less, it's a 12-month contract. It would not typically have to be included, but again, there could be other circumstances that would cause you to decide otherwise.
Yeah, the biggest thing we want to make sure that it's documented in there is related to options. You know, I had one district that, you know, received a better price because, you know, they implemented a software mid-year. And so she did an 18-month, you know, contract. So obviously that is not short-term. You know, you also have to take into consideration things like cancelable periods. So if both entities have a right to cancel at the end of each year, that is considered a cancelable period, you know, and could be excluded from the contract term and therefore could qualify for a short term as well. But the key is that you can't just assume. The analysis has to be done, the contracts have to be reviewed, and the determination has to be made for each one of those particular contracts to see if they're subject or not.
Yeah, I would just add on that, Brian. I think what you're saying is right. And then just in my time in the software side of this, you know, a lot of customers will ask, hey, I want the option to renew and I want to cap the price increase. So they create those options for themselves for reasons. And so you might have subscriptions that are 12 months or less and there's no options in there. But a lot of times when people are negotiating, they add those options for selfish reasons to cap renewal fees and things.
Yeah. As far as pricing and stuff like that, you know, if you join the product tour, you know, you'll be able to hear it there. That's not for today's discussion. And what else? There are a lot of subscriptions that are purchased through BOCES, obviously to get the BOCES aid throughout the year. So again, we'd have to renew the particular contract with BOCES. A lot of the ones that I've seen on the GASB-96 side have been multiple year lease contracts, and they were subject to 87, so they would be subject to 96 as well.
One thing too, Brian, that I didn't talk about operationally, but maybe somebody's got a system and they charge by the users per se, and maybe you signed up different users at different times of the year and you didn't prorate that to get it all on the same term. So you've created all these different present value calculations that you might have to do. And so call your vendors, get everything prorated and on the same subscription term to minimize the management of all of that.
Mm-hmm. One of the other questions is related to not having a formal contract, just a quote. The quote can act, that would be something that we would, you know, be forced to, in essence, look at this particular point in time. But if you can get some kind of term sheet that goes along with that, then at least that would also provide us with additional detail as far as, you know, any of those, the legal jargon that we have to, in essence, review regarding any renewal options or anything like that. So, what else? Another question regarding subscriptions, you only renew every year. Again, we'd have to take a look at the individual contract, like Lewis had said, and then you really have to break it down to see if there's any hidden options in there that we need to account for to really determine what the term period is. As far as leases that have already started, so I'm assuming the question means as far as like implementation. That's probably one of the things that are just a little bit different from 87 compared to 96, where 87, you know, you were in essence implementing as of the implementation date. 96 kind of gives you an option to do either, but recommends you go back to the implementation. So to the original implementation. So let me just pull that up real quick. Hold on. So it's a little different. Let me just try to say, I can't find it. I lost it. Lou, can you expand on that?
I don't see the question. I'm not able to read the question.
The question is pretty much when, as far as you remember at GASB-96, the implementation was done on the implementation date, that you didn't have to go back to the original contract term. The original, the original date, where 96.
The implementation date. That's right. And then all the prior period activity if you follow the GFOA guidance on 87, you're really just hitting a revenue and expense, and it nets to zero to book all that prior period activity, and then you're just sort of picking up. But you've got to know all those prior period payments and all of that information to sort of bring it all up to date and where it is. So you do have to book the prior period activity, but you just do it in a net zero kind of entry on the current year financials. Does that make sense? Is
Yeah,
that what you're asking?
Is that the same thing for 96 as well? That'll be pretty much as of the implementation date. Yeah, I'm gonna clarify that because I see some contradicting information in the actual GASB itself. I was informed that it was pretty much the same as 87 as originally discussed, but there's some information here that seems to be contradictory to that. So I just want to clarify that, and we'll send that out to everybody.
Yeah, I can't see the question, so I'm not certain as to what you're saying, but.
Okay. All right, I think that is all the questions.
Okay.
All right. In that case, that concludes today's webinar. Brian, Lou, Scott, any last words?
No, that is, yeah, just get started, with this particular process. Start gathering that information as soon as you can. Make sure you get a couple of people delegated to start pulling that information, and make sure you got a complete population. That's really has to be the first thing. That's it.
Yeah. We certainly don't want to, fast forward 6 months from now when, we're doing all these, for this year at least, in New York, the school audits, and, there are deadlines to file those audit reports, and we don't want to hold up to be, not having the, GASB-96 information in a timely manner, that you've gathered all the information that we've, as auditors, had time to review it. So really, we're kind of pressing everybody on this call to really get this going as soon as you can.
And Harleen, you're going to send an email with follow-up materials, a copy of this deck, a copy of the recording, as well as an invitation to the webinar on Friday.
Absolutely. A recording, PowerPoint slides, and a few related sources like Lou's Guide will be made available to attendees via email within the next few hours. I would like to thank our speakers and thank you everyone for attending. Please remember to complete the short survey prompted at the close of this webinar. And again, thank you everyone and have a great rest of your day.
Thank you, everybody.